Good morning, ladies and gentlemen. Welcome to the Orbite Illuminé Fiscal 2014 Second Quarter Results Conference Call. Considering most of the company's shareholders are English-speaking, the management presentation will be held in English only. Questions will be answered in the language of the question. A transcript of this call will be available in English and French on Orbite's website this coming Thursday, and a recording of the webcast will also be made available on the site. Considérant que la plupart des actionnaires de la société sont de la langue anglaise, la présentation de la direction sera tenue en anglais, tandis que les questions seront répondues dans la langue de la question. La retranscription écrite de l'appel sera disponible sur le site d'Orbite, en français et en anglais à partir de jeudi, tandis que l'enregistrement de l'appel sera aussi disponible sur le site. S'il vous plaît, notez que la discussion de ce matin peut inclure de l'information prospective. Les annonces prospectives ne sauront être interprétées comme une garantie de rendement ou de résultats futurs. Elles sont ajoutées à des risques connus ou inconnus, à des incertitudes et des hypothèses et des autres facteurs imprévisibles, et dépendant de la volonté de la société. Orbite n'a pas d'intention de mettre à jour l'information et les annonces prospectives et sur lesquelles nous vous suggérons ne pas porter une confiance excessive. Before we begin, I would like to remind everyone that certain matters discussed in today's conference call or answers that may be given to questions asked could constitute forward statements that are subject to risk and uncertainties relating to Orbite's future operational results or business performance. Actual results could differ materially from those anticipated in those forward-looking statements. The risk factors that could affect results are detailed in Orbite's periodic results and public filings, which you can access in SEDAR's database found at www.sedar.com. Please note that Orbite disclaims any obligation to update any forward-looking statements discussed today and at this time. All participants are in a listen-only mode. Following the presentation, we will conduct a question-and-answer session. Instructions will be provided at that time for you to queue up for questions. If anyone has any difficulties hearing the conference, please press *0 for operator assistance at any time. I would like to remind everyone that this conference call is being recorded on Wednesday, July 30th, 2014, at 10 a.m. Eastern Time. I would now like to turn the meeting over to Mr. Glenn Kelly, President and Chief Executive Officer. Please go ahead, Mr. Kelly.
Thank you. Good morning, everyone, and thank you for being with us on the call. I'm joined today by Jacques Bédard, our CFO. As per usual, today's call is divided into three parts. I will start with an operational review of the quarter and an update on our HPA project, following which Jacques will discuss the financials. I will then return with some forward-looking comments prior to opening the floor for questions. We continue to execute well against our 12-month project timeline towards the completion of our 3-ton-per-day high-purity alumina facility in Capshaw, Quebec. A project to build a first-of-its-kind industrial facility has many moving parts related to technology, engineering, equipment, construction, finances, and personnel, as well as commercial outreach. We are progressing well on all of these fronts. On the technology side, we continue with the optimization of the operational parameters of our process, and much of this work was done at our Technology Development Center here in Montreal, with confirmation through limited production runs at the HPA facility in Capshaw. This optimization work on the process will continue in the coming months, with the final fine-tuning stages during the commissioning and the startup of the plant in December. The first objective of these efforts is to optimize the process with regards to product quality, production yields, and operating costs. The second objective of the production runs is to produce samples for shipment to potential customers to tie in with their supplier qualification processes. This is also where another capability of our Technology Development Center will be used, namely for product customization to ensure our products will meet the requirements of the niches we will be going after. The results obtained through the optimization work are important input for detailed engineering on which we are progressing well and close to finalizing with our partner Seneca. The main development with regards to equipment supply this past quarter has been progress on the calcinator from Outotec. As we reported recently, the elements of the system we sourced from Outotec in Germany have arrived in Quebec, are stored in the Capshaw area, and will make their way to the plant site in accordance with our construction schedule needs. This shipment represents roughly 50% of the total value of the calcinator, consisting of some refractory and solids handling devices, as well as monitoring and control instrumentation. The pre-shaped refractory bricks and the special mortar, all 300,000 pounds of it, have also been delivered to the storage site near Capshaw. The remainder of the calcination system, predominantly the 3 vessels, will be arriving from the Outotec facility in Burlington, Ontario. Fabrication is scheduled to be completed well prior to the planned installation of the calcinator on site. We keep close tabs on the production of the calcinator, and all reports relating to progress and quality have been extremely positive. In further technology development, we performed additional calcination trials at Outotec's pilot center in Germany to confirm our proprietary operating parameters determined at our technology development center, and to provide supplier data to develop process control logic for the calcination system. We've also initiated the procurement process for the other plant equipment, as well as initiated the tender process for plant construction, refractory installation and curing, as well as for vessel fabrication. We have recently awarded the contract for the structural portion of the plant, with the other major contracts expected to be awarded shortly. We're now gearing up towards the construction phase and have started to prepare the site for the arrival of the equipment and construction crews, and we anticipate plant construction to commence in early August, subsequent to the Quebec construction holidays, which are ongoing from July 19th through August 3rd. As a result of the progress made, we're now able, as an organization, to gear up towards commercial production. Important milestones in this respect were the hiring of a plant manager, a director of engineering, as well as the appointment of seven plant operators and a mechanical technician. The plant operators were all graduates of the 16-month AEC, Operation and Control of Industrial Processes program, offered in Sainte-Anne-des-Monts by Groupe Collegia, in collaboration with Employment Quebec and Orbite, confirming our commitment to building up a local workforce. The final part of the puzzle is finances. During the quarter, we completed a $10 million equity investment from Investissement Québec, and subsequent to the quarter, a U.S. institutional investor exercised its Series X subscription rights, investing an additional $10 million. This placement was initially postponed at our request when our share price was around 28 cents, and we completed the placement at 50 cents. With this strengthening of our financial position, we are now well capitalized and continue on schedule with the investments in our HPA facility. To summarize, once again, we are progressing well against our 12-month timeline towards commencement of commercial production in the first quarter of 2015. That concludes my review of the quarter, and I will now hand the call over to Jacques for the financials.
Thank you, Glenn, and welcome everyone. As per usual, I will focus on the areas we consider most relevant in assessing our financial health, which are our cash balance, liabilities, financings, and burn rate. As at June 30th, 2014, we held $9 million in cash and short-term investments, up by $3.7 million as compared to $5.3 million as at March 31st, 2014. The increase was mainly due to the $10 million equity financing from Investissement Québec, offset partially by cash used in operating and investing activities. As we mentioned in previous calls, in the second half of 2013, we implemented a rigorous cost control program which continues to date. As a result, cash used in operations, our burn rate, fell from 4.1 million for Q2 of last year to 3.3 million for the Q2 of this year. Cash used in operating activities increased by 800,000 to 5.6 million, the difference attributable mainly to an increase in non-cash working capital items. Cash used during the quarter is a reflection mainly of our investments in the construction of our HPA facility, as well as in our research and development, general and administrative, and HPA plant operating expenses. In relation to the 10 million funding by Investissement Québec, we issued 35.7 million units at a price of 28 cents per unit, with each unit comprising one common share and one-half of one common share purchase warrant. Each full warrant entitles to the purchase of one common share at a price of 33 cents for 36 months from the date of closing. We are pleased that the Investissement Québec is a strong and committed long-term shareholder, supporting our efforts to commercialize a truly unique technology. As we announced on July 11th, subsequent to the quarter, Creed Capital out of the U.S. exercised its Series X subscription rights and made a $10 million investment in the form of convertible debentures, carrying a 7.5% coupon and a conversion price of 50 cents. Also, the holder received 13 million share purchase warrants, each warrant entitling the holder to purchase one share for a period of 3 years at a price of 60 cents. Pro forma this investment, as of June 30th, we held 19 million in cash and short-term investments and had 21.1 million in positive working capital. Our agreement with Creed provides us with access to up to an additional 30 million, subject to regulatory and shareholder approval. Overall, we have continued to strengthen our financial position compared to the same period in 2013 and have access to sufficient capital to pursue our commercialization program, which continues to progress on time and within budget. Compared to December 31, 2013, we recorded an 8.3 million decrease in non-current liabilities, predominantly as a result of the conversion of December 2013 debentures into common shares, offset partially by an increase in long-term debt resulting from the 3.8 million loan from Canada Economic Development. While our HPA project progresses towards completion, bringing us closer to revenue generation, we continue to maintain strong financial discipline. The additional funds received through the various financing initiatives, together with funds which may come from the conversion of the Series Y subscription rights, constitute sufficient capital to see us through commercialization. So this is a very exciting time for the company, and we are pleased with our progress to date. So this concludes my comments, and I will now hand the call back to Glenn.
Thanks, Jacques. I'd like to spend a little time on Orbite going forward before opening the floor to questions. When I joined the company a little over a year ago, Orbite was positioned, and I'd say perceived, as a company commercializing technology for the sustainable production of alumina, notably smelter-grade alumina. However, from a thorough review of our technology, our assets, and our opportunities, it was clear that Orbite is about much more than alumina. As a result of this review, we have streamlined our activities into 3 distinct business lines. First, specialty products, which for now is focused on high-purity alumina. However, other specialty products, such as rare earths and rare metals, represent an even larger opportunity, and we will be pursuing these also. Second, waste monetization. This basically stands for turning ecological and economic liabilities into profitable assets by extracting all value from a waste source, such as fly ash, red mud, and mine tailings, and returning only a small fraction of inert residue, thereby remediating the original liability profitably without having to rely on legislation-driven incentives. Third is our commodities initiative, which we refer to as smelter-grade alumina, as well as hematite and silica. At our AGM, we requested and were given shareholder approval to change our name to Orbite Technologies. As I said, Orbite is about much more than alumina, and we feel the new name is a much better reflection of this. We still have some legal and rebranding work to do, including launching a brand new website. We believe the new name will become effective around mid to late September. Getting back to what we do, our three business lines all represent substantial opportunities. HPA is a growing market, and new opportunities in batteries and electronics screens are expected to accelerate demand for HPA products in the coming years. Rare earths and rare metals have become increasingly critical for a number of emerging technologies in the electronics and alternative energy fields, with growing government attention on securing supply. Through our aluminous clay deposits, we have access to substantial quantities of all of these valuable materials. The potential in waste monetization is very significant also, considering that more than 3 billion tons of red mud are lying around in ponds with no viable remediation technologies available, as well as more than 500 million tons of fly ash being produced annually. Our process, which extracts all value from these potential feedstocks, while only returning a fraction of the original material in the form of an inert residue, has the potential of being a game changer for the industry while addressing important cost, efficiency, supply, and ecological issues in the process. Finally, with our large and strategically located deposits of aluminous clay, we are well positioned to pursue becoming a strategically located and low-cost producer of smelter-grade alumina. I mentioned it before, but it is important to note that there is substantial overlap between our business lines. Red mud, for example, contains substantial quantities of alumina, while smelter-grade alumina is an important product from our planned red mud plants. Additionally, other products from red mud remediation or monetization will be specialty products such as rare earths and rare metals, as can be found in our aluminous clay deposits. All of these represent important opportunities, as I've said before, it is important that we pursue these in a structured and prioritized manner. Our primary focus this year is on bringing our HPA facility to commercial production. However, this doesn't mean we won't already initiate work on our other initiatives. We are actively working on waste monetization and continue our discussions with Veolia on formalizing our partnership going forward. Waste monetization will not happen overnight. As with all new industrial processes, we will go through a scale-up of the technology, following conversion of the HPA facility to the chloride process, and the addition of a gallium and scandium separation train, which will provide technology demonstration for our waste monetization and commodities processes. We will commence with the building of a commercial prototype for the monetization of red mud or fly ash. This is expected to be a plant with the capacity to process between 100 to 200,000 tons per annum of feedstock. Once built and completed, we expect to build the first full-scale plant processing between 500,000 to 1 million tons per annum of feedstock. Subsequent to this, we intend on rolling out the technology on a global scale, most likely through licensing deals. We have taken the first steps in the commercialization process with the appointment of Diane Néron as our Director of Engineering. She will be spearheading the technical realization of our waste monetization initiatives, even though presently she is heavily involved with our HPA project. The same scale-up process applies to our commodities initiative, but this is our third priority. So in summary, we are on track to deliver on our objectives. We are executing very well against our HPA commercialization timeline and are starting to put in motion our other initiatives. We have access to sufficient capital and are witnessing a growing interest from potential customers and other stakeholders. We have a strong and growing team, and we have a very capable and supportive board of directors. We have identified a number of important opportunities, and I believe we are taking all the right steps to pursue these. That concludes our prepared remarks, and I will now turn the call back over to the operator who will poll participants for questions. Once again, thanks very much for your interest.
At this time, if you'd like to ask a question, please press star, then the number 1 on your telephone keypad. We'll pause for a moment to compile the Q&A roster. Your first question comes from Claire DeJong. Your line is open.
Good morning, gentlemen.
Good morning.
First off, I'd just like to say that it's nice to actually, for shareholders to believe they can get honest reporting from the leadership of Ord again. It's comforting as a shareholder to know that. First question I have is actually, I think, a good news question, not related to HPA implementation or anything like that, but I believe I read a news release where you folks had identified that the ITC tax credits were starting to flow back to the company. I think, was it $6 million that was initially came back, which was good because I was always concerned that perhaps it wouldn't show up. And then also in the news release, I believe you indicated that you have the potential to get more than what I originally thought was a limit of $25 million. And so my question is on the going above the $25 million, is that something then that's specifically then been renegotiated to increase that limit? And are all of the HPA investments eligible for that increase? And I'm specifically referencing, Glenn, this was before your time, I think, that whoever was the contractor of HPA 1, they got into some sort of dispute with Orbite, and shareholders then woke up one morning and saw that we had been diluted to $13 million or something at 94 cents. So if you can just give some color on that, because I actually think that's pretty good news, because any of that additional money, I'm assuming, is beyond the convert requirement of 2012.
I'll try, and there are multiple questions in your question, so I'll try and hit upon all of them. Yes, we did announce recently a first installment from Revenue Quebec on the 2012 investment tax credits, which were for a total of $19.7 million. So, and it's important to recall this was a new program put into place by the government of Quebec. We were the first company to file under this program, so there has been a learning curve for the government and its employees at Revenue Quebec. But all of the administrative audits we've gone through with them are starting to pay off. We've gotten the first $6 million out of the 19.7, and we are expecting to get additional payments as we move forward in 2014. Your second point, and I'll hit upon your third, the additional investments in Capshaw are covered by this program. And so that is why we expect to have, once the construction is completed, a total of around $30 million, slightly more than $30 million in total investment tax credits due from the government of Quebec. And those will notably be generated due to the investments that we are carrying out this year. So as you also noted, the 2012 and 2013 investment tax credits, including the $6 million that just came in, are deposited in a separate account and are security against the 2012 debentures. I hope that answers your questions.
It does well enough for right now, so thanks for that. Another question I had is actually related to reporting and that kind of thing, because it was terribly deficient before, and it's dramatically improved. So I got a couple simple questions. The governance documents that are on the Orbite website, are they still completely in force, or have things changed?
No, they are still completely in force. They're fully complied with and, to use your term, enforced. I think you noted, and we had given ourselves an objective to be much more timely in terms of our reporting back to our shareholders in the markets, and I think today is a good example of that. We're holding a conference call less than 1 month after the close of the quarter. It's not always going to be like that, but our goal is to be within 4 to 5 to 6 weeks following the quarter, which is a normal cycle for companies such as ours.
Good. Then a question I had on what I would hope would be improved reporting. I've noticed the share count has risen in the quarter. You started the quarter at 250 or 251 million shares, ended the Q at 292, and I believe in your MD&A you noted that it's now up to 302 million shares. The units to IQ I understand, the options I understand, there's interest and debentures. And the question I had is, when those debentures are exercised, I, as a shareholder, would like to see some reporting on that, because I'm assuming, and correct me if I'm wrong, and this gets back to, I think, the structure of the financing with Creed, which in the world of debentures I would actually say is even pretty intricate. And my fundamental belief is Creed is not going to be holding the debentures. It's beneficial to both you and them to have them change them into shares for some cash. But I'm assuming when the debentures get exercised, is there cash coming into the company as part of that conversion process or not? And if you could just speak to any and all of that, it would be greatly appreciated.
Okay, well, there are a couple things, and you touched upon them. The increase in the share count is a result of, and especially over the last quarter, of a variety of things. Warrants. We have had some warrants that have been exercised. Options that have been exercised. And as you noted, also the debentures that are being converted into shares. Now, I think your proposal was for increased reporting to inform you when either of these happen and the share count goes up. A couple things. One, that is not normal regulatory, it's not a requirement. And two, I would use the December 2013 debenture offering as an example. We had over 150 debenture holders that converted their debentures into shares as per their own volition at the time that they wanted to. We would have been reporting 150 times back to the markets each time somebody converted. So it's I would think probably interesting for you to know, would be very difficult to manage, and I'd say fundamentally is definitely not a requirement of either the TSX or the AMF. What we tend to do and want to do is inform you through our quarterly reporting as to the increase in the share count. Does that answer your question, Claire?
Your next question comes from Ollie Primack. Your line is open.
Good morning, gentlemen, and congratulations on your achievements over the previous quarter. I echo what Claire said, that it's excellent to hear that there is some positive and consecutive reporting over the last year. My question really pertains to the CapEx and the timeline for capital expenditures through to the end of the year towards the production of the first HPA 3-ton per day plant facility. Just wondering if you can break it down a little further in terms of when the capital expenditures and the amounts of capital expenditures expected, or maybe even just like the major items going forward until the end of the year.
And I'm looking at our CFO here, but very general numbers. We have about $20 million left to go in investments. And those, between the time they are incurred and the check is cut, there is a lag, depending whether it's construction or it's the ordering of a major piece of equipment. One thing is definite. The remainder of the costs will all be incurred prior to the end of this year. The payments may lag by 1 month to a possible 2 months for certain construction parts, and amounts that we will withhold until we are sure things have been done correctly. But on a cash basis, all of the money will have left Orbite's accounts by February of 2015. Does that answer your question, Ollie?
It does. Thank you. I guess I'll just jump back in the queue, and if I have any further questions, I will follow up afterwards.
Thanks very much.
Thank you.
Again, if you'd like to ask a question, please press star, then the number 1 on your telephone keypad. Your next question comes from Claire DeJong. Your line is open.
Hi, guys. Not to go back to the debenture reporting, Glenn, I'm fine with that. I would just like if it was actually, if the first series of debentures had been completely converted, it would be nice to actually get an NR saying that that was done. But my next question actually relates to, and it was something I think Jock brought up, which was, again, very encouraging. I think he referenced something in the call about with the collection of monies that have come in so far, you may be financially set to get HPA2 up and running. And then that relates to my question on the next series of CREED financing. Is that the Series Y, the $30 million? That's a shareholder vote, and is there any sort of estimate as to when that may be occurring?
Okay, two questions there. I think your first comment was on it'd be nice to know when the first debenture is completely converted. That is not information we are allowed to I think once it's done, but it's not information that's proprietary to the people that hold those debentures. I recall once again, or I'd like to recall, we had more than 150 investors that participated in that. So we can do and we have to update the markets on a quarterly basis, and we'll do that. Once the whole debenture is converted, I think we will be allowed to report that. And in the financials, I think we...
Yeah, in the financial, we're actually disclosing how many warrants, not warrants, sorry, but convertible debentures that were converted. So you're able to track the remaining amount.
What's left, yeah.
It could be,
yeah, no, that's fine.
Yeah. Now, to the second question on the HPA facility, I indicated to the previous caller that we had about another $20 million to invest. If you look at pro forma where we are cash-wise, that's about what we have in our bank account right now. So we have enough money to finish the HPA facility. Add to that, though, our monthly burn, so we don't have enough for both. We require an estimated to get us to completion of the facility and start up, and this is a very general number, about $10 million. So an additional $10 million, which brings you to your next question, the Series Y subscription rights that are held by CREED. That is subject to shareholder approval. We have the obligation to go back to shareholders and notify the shareholders of the shareholder meeting within 120 days of the exercise of the X. The X were exercised, if I remember correctly, July 11th. So that would be sometime in November or prior to the 4th of November, we would have to be going back or indicating to the shareholders that there would be a shareholder meeting. So do we require the full $30 million? I think I've answered that. The timeline for going to shareholders, I've answered that. And maybe I would just add that we are very happy to have had CREED as an important investor, but we are always evaluating and considering what other financing options are out there for us.
Good, and I would expect you to, and it's all good. So sometime no later than somewhere around November, we should hear something. So
yeah, by the beginning of November, shareholders will have been contacted publicly to say that there will be a shareholder meeting being held.
Your next question comes from Peter Trapp. Your line is open.
Yes, good morning. I wonder, turning from the financials to the future opportunities with waste management and possibly Veolia. You've spent quite a bit of time talking about the red mud potential. I'm wondering if you could just give us an update on where you stand on the fly ash side and whether that is on an accelerated schedule or whether it's red mud before fly ash and what the potential either joint ventures or potential contracts are on the fly ash side. Thank you.
Thank you, Peter. Good to hear from you. The red mud, I would say red mud and fly ash are as important in terms of our development priorities. I would personally say that I perceive more value on the fly ash than the red mud for a variety of reasons. The processing, the quantity of fly ash being produced, the areas in the world where fly ash is being produced. And just for the sake of the other listeners, fly ash is the residue left over from coal-fired power generation, which, as we know, is very present in Europe and North America, to a limited extent in Eastern and Western Canada, and very heavily so in China. So our goal, and the nice thing about the Orbite technology is, as we further either red mud or fly ash, we're working on both at the same time. The technology platform is the same for both. Pre-treatment is different a little bit, but that is a very minor part of the process. So fly ash is not on an accelerated schedule. It's on, I'd say, an equivalent level of importance relative to red mud. If I turn to partnerships and potential partners, the interest in fly ash is as great as the interest in red mud. And people that want to work with us in one want to work in the other also. They see it as, one technology being applied to two industrial wastes that have value. So when we speak to potential partners, we're not talking about only one or only the other. Very often, at their request, we discuss both. Hope that answers your question, Peter.
So would it be fair to assume then that in conversations that you may be having with Veolia, that the subject of fly ash is equally as important as red mud, or other joint venture partners or partners that you're talking to, where that's the bigger issue, and red mud is of less importance? And my second question is regarding the rare earth and the rare metals. I'm wondering if you could give us a little bit of insight as to time-wise, assuming that you get into production at the HPA plant in the first quarter of 2015, does the rare earth and the rare metals follow immediately after that, or is it just a general part of the development so that you will start working on it already in 2014? Thank you.
Your first question in terms of is fly ash as important for either Veolia or other potential partners? I would say on a general level, once again, when people approach us or we discuss with potential partners, they want to speak about both. Both of these residues have essentially the same vitamins, if I can put it that way, in terms of rare earths, rare metals, alumina, titanium, magnesium in some cases. And the process underlying the extraction of these minerals is the same process. So in general, Peter, the interest level is as high on both sides, and generally people would want to work at and look at both at the same time, I'd say generally. In terms of rare earths and rare metals, recall our plan for the HPA facility. Step one is 3 tons per day of HPA, finalizing the purification section of our plant, which is what we're doing now. Step 2 is the conversion of the front end, what we call the extraction unit of the plant, to our chlorides technology, which will then allow us to extract scandium and gallium. The engineering for that, as we phase out and finish the detailed engineering for the HPA, for the phase 1 with Seneca, we're going to embark on our preliminary engineering for the conversion to the chlorides process. And we expect to report back to the markets at the end of this year, the beginning of next year, the cost and effort to convert to the chlorides process. Subsequent to that, our plan was in the second half and into the later part of 2015, start doing the construction and conversion work of the front end of the plant so that we will be producing rare earths and rare metals at the beginning of 2016. Now, to produce those rare earths and rare metals, we'll have to be bringing in either red mud or fly ash or our aluminous clays as the feedstock for the extraction unit of the Capshaw facility. This is a long answer. I apologize for that, but ultimately, in 2016, The Cap-Shop plant, our HPA facility, will not only be revenue generating and selling high purity alumina, it's going to be an industrial scale demo of our technology platform, and we'll be able to bring in any of the feedstocks we've been speaking about, treat them, produce the rare earths, and send the alumina on into the process and purify it for high purity alumina. So it's a stepwise process, but to answer your question in the short fashion, rare earths, rare metals, look to us to be announcing end of this year, beginning of next year, timelines and costs, and we expect to be producing them in early 2016.
Thank you. And I have one more question, but I'll jump back in the queue unless I'm the last one.
Again, if you'd like to ask a question, please press star 1 on your telephone keypad. Hello there. Once again, if you'd like to ask a question, please press star 1 on your telephone keypad.
I think Peter Trapp had another question. Peter, are you able to get back into the queue?
Peter, please press star 1 to ask your question. There are no further questions at this time. I would now like to turn the call back over to Mr. Glenn Kelly.
Well, thanks, everyone. That concludes our quarterly conference call, and we look forward to reporting back to you at the end of our Q3 period, and in the meantime, updating you on the progress as the equipment arrives and as construction gets underway. We will be updating you as to the progress of our HPA facility. And once again, thank you for signing in today and being part of our quarterly conference call.
This concludes today's conference call. You may now disconnect.